In our last Elliott Wave review, we projected the first target at $3,714. The market moved very close, but missed that level by only $7. Now, the Federal Reserve has introduced a quarter-point rate cut. This change is small, but it tilts the balance in favor of gold. Lower interest rates reduce the cost of holding gold, and this adds to its long-term strength. At this moment, our attention shifts to the 3,676 zone. If price breaks and holds above this level, we prepare to go long. That entry would mark the beginning of Wave 1 of the fifth intermediate wave. This is not just another move. It is the opening step towards the final upward journey in this cycle. From there, momentum can accelerate as technical structure and macroeconomic factors align in gold's favor. Stay tuned as we follow the unfolding path of Wave 5 in the weeks ahead.